Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Wednesday, July 16th. In today's episode, I'll tell you why NVIDIA just got a big boost to their business. Then, let's recap earnings from the big banks. Investors are paying attention to earnings which kick off this week. And like I mentioned in yesterday's episode, the expectation for this quarter are pretty low. In fact, according to Bloomberg Intelligence, 6 of the 11 S&P 500 sectors are expected to post a drop in profits. So the next 2 to 3 weeks are going to be pretty crucial for the markets as the dust settles on the trade war and as investors find out what kind of impacts tariffs are having on company profits. If profits come in lower than expected and the US doesn't strike any significant trade deals before August 1st, that could be a 1-2 punch for markets going into August. It's been a great summer for NVIDIA. They became the world's most valuable company, the first one to top $4 trillion market cap, and things just got even better for them. The US government is now allowing NVIDIA to sell their H20 chips in China. Remember, NVIDIA made the H20 chips specifically for the Chinese market. It's a less powerful version of their most advanced AI chips, and it was made to meet export restrictions to slow down China's AI progress. NVIDIA CEO Jensen Huang met with President Trump, worked his magic, turned on the charm, and now the Commerce Department is issuing licenses to NVIDIA to allow them to sell their H20 chips back in the Chinese market. This decision should open up the door for billions of dollars in revenue for NVIDIA. Investors were pumped to hear this news, and shares are up around 5% this morning. The company is on track to add $200 billion in market cap just today. So why did Trump allow NVIDIA to start selling in China? The Wall Street Journal is reporting that Chinese officials are seeing this as a good faith gesture. So this isn't just bullish for NVIDIA, but it could be a bigger sign that trade tensions between the two largest economies are cooling. Let's shift gears and talk about the big banks, because a few big names just reported earnings. Let's start with JP Morgan, the biggest bank in the world. They continue to crush it. The bank topped profit forecasts and raised its outlook for net interest income, which is the difference between what the bank earns on loans and what they pay out on deposits. JP Morgan now expects to make $95.5 billion in net interest income this year, which is $1 billion more than what they previously expected. Now, the real surprise here is their investment banking division. Analysts were bracing for a 14% drop in that division, but instead, the bank grew it by 7%. Despite all the noise and uncertainty from tariffs, deal-making didn't seem to slow down. And the market volatility over the last quarter was good for equity traders, which grew revenues by 15% last quarter. Wells Fargo also reported earnings. They also beat profit estimates, but they didn't fare as well when it comes to the net interest income. The company cut their 2025 guidance for net interest income, and they now expect it to be in line with last year's levels. Finally, Citibank reported earnings, and their traders have had a big quarter thanks to the tariff-induced volatility. Citibank reported its best trading revenue for the second quarter in the past 5 years. In fact, all 5 of Citigroup's businesses experienced revenue growth in the recent quarter. So overall, pretty decent earnings from these big banks. Citibank stock is seeing the biggest jump today out of all of the banks. Their shares are up more than 3% at the time of this recording. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of MP Materials are popping off this morning, up nearly 10% on reports that Apple is planning to invest $500 million into the company. Remember, the Pentagon just invested $500 million just last week, and now Apple. MP Materials owns the only rare earth mineral mine in the US, and rare earths are a big deal. These minerals are crucial for making high-powered magnets used in everything from EVs to fighter jets, iPhones, iPads, and all of Apple's lineup. Lately, rare earths have become the chess piece in the trade war with China. China used these rare earth exports as leverage in the past trade fights, which pushed the Pentagon to strike a multi-billion-dollar deal with MP Materials. It looks like Apple is joining the party as well. As part of their $500 million investment into MP Materials, Apple will now start sourcing magnets from its Texas factory and also co-develop a new magnet line in California. MP Materials is up 21% today and up 90% in the last week. On the flip side, BlackRock stock is down despite the finance giant hitting an all-time high in assets under management of $12.5 trillion. BlackRock pulled in $46 billion in new investments last quarter, but investors were disappointed with net inflows into long-term funds, which fell by nearly 10% over the year. As a result, shares of BlackRock are down around 3% at the time of this recording. That's all for today's show. Keep navigating those waters and see you tomorrow.